it isn't for a lack of not having options to go out there. It's you identifying what you feel comfortable with that you want to go do and doing a couple of those things and not being completely codependent on one referral partner or one source of generating business, understanding that there are a variety of different ways to do it, and you need to master a couple of them to be successful at what you do and make it replicatable and scalable.
Hey guys, Wally Olivieri. All right, so what is 24/7 mindset? Most times when you hear 24/7, you're thinking what? 24 hours a day, 7 days a week, just grinding, hustling. I learned over time, a 24-year career in mortgage and multiple other businesses that I own is, unfortunately, you'll get burnt out. I became an absent father, I became an absent husband, and I became a poor business leader because I was trying to work 24 hours a day, 7 days a week, trying to build a business, maintain a business. When I learned how to work smarter, not just harder, by doing things the best way it could be done, instead of just simply doing my best, I learned how to work only 24 hours a week, 7 months a year, while I got paid from the business residually 24 hours a day, 7 days a week. You can do the same. Welcome to the show. All right. Thanks so much for joining 24/7 Mindset Show. Another great interview today. I'm super excited about today because it's pretty neat when I get to meet somebody that I've looked up to and been part of different mastermind groups with. And what's super cool about Jonathan, and he'll kind of share more about his wisdom in his world. We're in a mastermind group together, and it was funny. I think it might've been like 2019, 2020 or so. I was talking about my client concierge system and how I was launching it and then building it and all these great successes of it. And Jonathan's asked, okay, so what's your conversion rate here? What's your numbers here? What's your numbers here? What's your numbers here? And I'm like, I have no answers for you. I just know like it's working really well and I'm making a ton of money. So Jonathan's one of the smartest, most challenging thought leaders in the industry. So Jonathan, I appreciate you joining us and I appreciate your time.
Anytime, and thanks for having me, and thanks for saying that.
I think since I've ever known you, you weren't like a loan officer trying to, do more loans. You've always been a leader of leaders. When did you start that journey?
Yeah, I think that's a great question. So I think if you kind of, if my trajectory or kind of my thought process on mortgage, you'd have to go back to the emphasis of or the genesis rather of when I got into mortgage. And so originally I didn't have any desire to want to be in the mortgage space. I actually wanted to be a reconstructive cranial facial plastic surgeon. And so when I was younger in my, just giving you a little bit of a background on me, when I was younger, I was born with big ears or ears that stuck out. And so I had a complex about it. I got made fun of at school about it. And so, so much so to a point where, I'd glue my ears to the back of my head because I was that embarrassed about it. My mom was mortified that I was doing this and then took me to a plastic surgeon who then pinned my ears back. But when I came out of that process, the difference that it made me feel as a result of feeling normal and not feeling judged or ridiculed made me want to embark on this process of wanting to help people that get maimed in accidents or, inevitably get disfigured and making them feel comfortable in their own skin. And I think society has a way of being cruel if you don't fit quite in the box from an aesthetic mold or whatever may have. And so for me, it was wanting to help people feel comfortable in their own skin and feel normal. And so I went to UCI for undergrad. I was pre-med. I worked full-time while going to undergrad. And I got about 2/3 of the way through and I took my MCATs and I was excited about the score that I got, which was a 37. And I remember going to my guidance counselor and asking, her, hey, where am I going to go to med school? And she was looking at my GPA, which I thought was okay. It was a 3.0 GPA at UCI. And she's looking at me, shaking her head. She's like, Jonathan, she goes, your GPA is not competitive enough to go to med school here domestically. Even though you have a high MCAT score, you're going to have to go outside the United States. And so I said to her, okay, well, can I go, can I go back and retake my classes? And so in the UC system, you can't go back and retake a class if you got a C- or higher. And so the one thing that people may or may not know about the UC system is, depending on the med school that you're in or the program that you're in, some of the programs are ranked. And so if everyone gets a B, then they adjust it and people get C, et cetera. And so, if we want to talk about like grit and perseverance, I came from a good family. I worked full time, but I have a photographic memory. And so I was the type of guy that was working 40 hours a week and then going to class and, taking 18 to 22 units, a semester. And, did I go to every class? No. Did I cram a lot? Yes. And then I'd go into a library and I'd read a textbook, read the chapter, and then go take the test with a high, retention rate. And you just have these kids that are coming internationally where their whole families are banking on them becoming successful and helping them. And now and later in life, I appreciate that determination. I just simply didn't have the work ethic that these kids had and understood the opportunity. And that was the first juncture in my life where I couldn't go back and fix what I had done. There's this saying, you reap what you sow. And I had sowed that, and there wasn't a way to go back and change it. And I guess in retrospect, I could have gone to school in the Caribbean, transferred into domestic med school, but I didn't think through it to that point. And so, my dad at the time was like, look, if you're not going to be a doctor, a lawyer, accountant, I'm not paying for college. And so I'm thinking to myself, what am I going to do with my life? And so I worked in retail, and I worked in high-end retail, and I was a personal shopper. And I had a client that came in that owned a mortgage company. And this guy, came to the United States with not a dollar to his pocket, ended up working at a gas station, ended up buying a gas station, then saved up his money, got into real estate, opened a successful mortgage company. And he was kind of the preeminent, American dream. And I'm looking at this guy going, if this guy could do it, I could certainly do it. And
Yeah.
so, thinking to myself, how am I going to provide and how am I going to be successful? My dad was a super alpha, personality that owned his own business that was successful and, wanting to prove him wrong. And so I'm like, okay, well, this guy doesn't seem like the brightest crown in the crown box. I can certainly do it. And so he said to me, hey, Jonathan, why don't you quit, college? Why don't you come work for me? And I'm like, I'm going to finish college, Daniel. I'm not going to come work for you. And so he said, okay, well, when you get done with college, why don't you, come work for me? And I said, okay. And he's like, I guarantee you what you make in a year, you'll make in a month. And I said, okay. And at that time I was making like 75,000 a year. And this was good money back in the early 2000s. And so I went to go work for him. I got indoctrinated. I got put on a call floor or call center floor. And, it was kind of a sink or swim mentality. And that's much to the way of what mortgage is today. You can't go to school for it. You kind of get indoctrinated by fire. You either have it or you don't. And if you figure it out, you kind of drown haphazardly, but get to the other side of the pool. And inevitably, if you make it, you get more proficient going back and forth. And that's kind of how you figure out your stroke and your quote secret sauce. And it's not until later on down the road, as you get older and you're tired of touching the stove, that you start asking the questions and start becoming collaborative to the point of where we met ourselves later on in our career. And so I went to work for him, and in 4 months I had made a significant sum of money. And I just realized, I'm like, okay, well, if, I could do this for him, instead of doing $300,000 loan amounts, I'd like to do $1 million loan amounts, and I'd like to work with more affluent clients. And at that time I was getting my MBA. And so I went to go work with a gentleman who ended up becoming my partner, and he was a broker, and I jumped into the broker space. Now, mind you, I got into the business around 2005, and I jumped over to the broker space in 2006. And this gentleman had like 5 loan officers, and he was focused more in the affluent end of the market in the coastal areas. And so my career started with him, and we grew this office from 10 employees to 80 employees, and in the process trying to buy a bank. And then 2008 hit, and without getting into the complexities of it, when you go from being a broker to being a banker, there's net worth requirements, audited financials, et cetera. And so, got my, I guess you could say, for lack of a better word, my ass handed to me. And, we grew this company out. My partner said, hey, I'm going to own a title and escrow company. We had to lay off a bunch of people. I merged it with another company, went to go work for that guy, asked to be partners in that company. That guy said, hey, I'm not going to probably make you a partner. I said, okay, well, I'll come back to you in 2 years, and either you're going to make me a partner, or I'm going to walk out with half your staff. And inevitably at that point, 2 years to the day, I came to him, and he said no. He's like, I'm good with where I'm at. And I said, okay, great. Gave him a really expensive bottle of tequila, and I resigned that day. And then that ended up being my jump to a traditional IMB platform. Went to Guild. Started an office that became the second biggest office in Guild Mortgage by size. Grew it from 0 loans to 30 million a month. Did a consumer direct model that was a hybrid with traditional retail. Went to Bay Equity, moved there, stayed there for 7.5 years, did exactly the same thing. And I've always wanted to build a business. I've always led people. I've done production. I think peak production that I've done is in 2020. I did $120 million individually. So I'm a consummate learner. I want to get better at the process. I love selling, but I like building things that are bigger than myself, to get back to the answer to that question. And inevitably at Bay, they were happy with a high producing loan officer that had a big office. And my aspirations for what I wanted, that wasn't necessarily aligned with what they thought I should be doing. And I had made them a lot of money, and, they were comfortable with where I was at. So in 2019, I moved over to Cardinal Financial with the disposition of wanting to do business differently. And Cardinal had a unique proprietary platform, an LOS system that was trying to automate the mortgage process, which I thought was amazing. And my partner that brought me in at the time had recruited me to Bay Equity, and he ran head of retail for that company, and that's how I knew him. But he had about $25 million of production in branches, and at that point, I'd never really set up branches other than satellite offices. And he said, "Hey, Jonathan, if you want to further your career, I will give you the platform. I will mentor you and give you the runway to go do that." And so, in the matter of 24 months, we took what was, let's call it 50 million a month of production. We took it up to $220 million and expanded our footprint to 30 offices in 25 different states. And we had a successful run. And then, much to the same of what happened in 08, we had 22 happen and interest rates rise. And, arguably the environment and the landscape that we're dealing with today makes 08 look like a cakewalk. And so,
yeah.
And you're an entrepreneur too, Wally, and I think you can appreciate it. When you get your hand burned off, which in the earlier part of my career, I made a lot of money and then I lost all of it, that tendency to want to get back in the saddle and limit your risk, and in turn, how you go about doing things, I was hesitant to want to, especially after the CFPB came in and Dodd-Frank and all the licensing and the financial requirements and everything that you have to run an IMB. When you start looking at that, it becomes, it takes a huge amount of fortitude and, I guess you could say, balls to want to go start a company, especially in our environment, right? So I've always kind of took this initiative to build businesses inside of businesses and been successful at it. And so, that's been my progressive, I guess you could say, career path, is to do that and just keep pushing the bounds in that aspect. And so, I am now in my, I guess you could say, fourth iteration. I just recently made a move. Now I am the president of Gold Star Financial. I run a business inside of a business. I make the decisions. I shouldn't say all the decisions, but I have a lot more autonomy than I had at Cardinal in terms of what my responsibilities entail and what I'm required to do. And I think as I've gotten more involved in the process, it's learning each of the positions and understanding them intimately inside and out, understanding what your metrics are, what your baseline is, understanding operations, capital markets, et cetera. And so I've tried to surround myself with phenomenal coaches, like, our old coach, Todd, who I consider to be like the Home Depot of mortgages. You go to them, you're going to get a tool that you can go take to your sales force to go grow. Or Brian, who ran Countrywide, Stearns, MetLife, or I have another gentleman that's a leadership coach. And I think the one thing I find myself in as I get older is how much I don't know versus how much I know, and just the disposition of wanting to learn more and get better at what you do. And so, that's been, I guess, I'm constantly wanting to learn, and I'm a consummate learner, and that's what gets me excited about it. And inevitably, at the end of the day, we're in the business of people, and people drive our company. And so it's, getting really clear with what your values are and what your vision is, and putting systems in place and processes, and then finding the right people that fit your vision and values, and then putting them in the right seat, and then empowering them to take ownership for what they do in their job every day. And I think that's the key to managing people. Obviously, there's more to unpack in that, but I mean, I think, as we've all scaled and tried to build offices, we've gotten burned along the way. And so, what doesn't kill you makes you stronger, and you get molded into where you're at today. And I think, the disposition of what we're facing today as an industry is certainly a black swan event or a defining moment. But I think that if you can thrive in this environment, which arguably, if people are still doing business and mortgage today, then arguably I would say each and every one of you are elite. And I think it's, being effective with what you're doing day in and day out. And, again, we can kind of unpack that further, but, I think the landscape is irreparably changed, since what we're going through today. A lot more different mechanics than what we've been accustomed to.
Let's elaborate on that, because if you look at it, which I think it's super impressive to think, like, 4 years ago, you're a $120 million producer, which is a plenty of production, and that's awesome, to where now, 4 years later, you're a president of a mortgage company.
Yep.
So tell me about what lenses have you had to set down, and what new lenses have you had to put on, going from a $120 million producer to now a president of a mortgage company?
Yeah, so I still actively do loans today. So like, if I take into account the production that I do, and I still do a lot of like hard money bridge loans and that kind of stuff, because I'm still in that world for the ultra affluent when they want to buy something and their private bank doesn't come through. And I would say that what makes me different than most other executives is that I still do production. I think you have to do production to be relevant to talking to your sales team and understanding what's relational to them in their market. And I love working with clients. And so, as much as I'm a mortgage executive today, I still do loans, I still write loans, and I think it's important to have that be a part of the process. I think that, evolving into, building a business or scaling an organization, it's as much about understanding what your vision is and what you're trying to do than going out and getting the right people and then empowering them. And really, I would rather say that all of my branch managers or people that I work with, I consider it a partnership. I don't consider it like an employee-employer. At the end of the day, I'm here. I provide a platform, a set of tools, a set of capital. I provide a transparent framework. It's coming alongside them, understanding how they want to run their business, then trying to complement what they're trying to do and enhance what they're trying to do. And each individual operator is different in terms of what their needs are and what their expectations are, and it's meeting them where they're at instead of trying to fit everyone in the same box. And that's where I say to you, it's as much about putting the right person in the right seat as it is finding the right candidate. And so I think as you manage people and you have an organization, I think at peak I had 500 people that were in my direct report, or indirect report at Cardinal. If you're not empowering the right people and delegating yourself out of a job, all you're going to do is get blown up all day with problems and issues. And that becomes a limiting factor, because the single most important thing that we all have is our time. That's something that you can't buy or you can't get back. And so you have to be protective of your time and wanting to make sure that what you are spending time on is productive. So like, for an originator, their highest and best use should be doing borrower consultations, or it should be meeting with referral partners. And if they're doing anything other than that, that's a limiting factor. And so a lot of originators feel like they need to process the file because they need to be in control, because they think that that's going to help their clients along better. And what I would argue is that no, you need to trust the people that you work with and let them take ownership for the role. And you need to be focused on what you can control, which is prospecting and doing what you do best. And I think it's learning to define your lane and then empowering people in those lanes to be able to do that. And so I think I've gotten progressively better at making sure that I identifying the right people to hire, because I've certainly made a bunch of horrendous choices and touched the stove a bunch, but then empowering them and coming alongside of them so that, like, I'm sitting with you today and, my IM or my phone hasn't rang once. And that's a testament to the people that I have in their roles to deal with the noise and all the other stuff that goes on with running a company day in and day out.
Yeah. And I think one thing that you've been really intelligent about, and one thing that I enjoyed our conversations has always been around understanding the lenses between a good loan officer and a great loan officer. So in this market today, what do you feel the difference is between what are good loan officers and what are great loan officers?
Yeah, so I think the market today, I mean, if it's much to the same as if you look at the real estate market, right? If you look at the amount of real estate agents that are out there and then the ones that are actually doing the business, it's, 10% that are doing 80% of the business. And I think the same holds true today of, looking at loan officers as a whole. A players or A personalities, what they need is just a completely transparent platform. They need to understand what their tools are. They need to understand the rope that they have to work with. And you need to be aligned in your vision, right? In your values. And other A players self-police themselves anyways, right? And if you give an A player the position to hire them, then they themselves are going to go out and run and do whatever it takes to get the job done. And someone like yourself or like me or any other A player, they're winning in this market because they have a system in place. They have a go-to-market strategy. They're clear what their value proposition is. They understand their local market explicitly, inside and out. And if they need help, they're going to go ask for what they need to be able to go get the job done, but they're not going to wait on other people to do it for them. Then what you have is a B player environment, which is, really great people that are really bright, that have great attitude and are willing to put in the effort, but they lack maybe the knowledge. Maybe they need accountability. Maybe they need systems, right? But, with the right platform and the right systems, they can be an A player. Then you have what predominantly was our business, which is a C player. And a C player in 2020 and 2021, this was an originator that did $31 million in volume, that on average had 4 referral partners, of which 60% of their business was refi. That same originator in 23 funded $5.7 million, has 2 referral partners. 2 of the referral partners that they had went out of the business. All the refi volume dried up because 90% of the people that have mortgages have refinanced and have a rate under 6%. And so now they don't know what to do. And they're going to take the victim mentality, which is, hey, I used to do this. I was successful at this. Nothing's working for me. And they're not going to self-reflect on what they need to do to control their environment. And inevitably, this is where the time suck happens. This is where we lose the most amount of our time as leaders, because we see the best in these people, but they don't see it in themselves, and they're not willing to do what it takes to make the moves necessary to thrive. And, the hardest thing for, let's say, myself or any leader in 22 going into 23, and then certainly now in 24, is that the waters were not clear coming out of 21, let alone when we went into 22. And I remember we were sitting at, in Utah, and I said, hey, this is going to be a career ending event, and I think, it was in March, and I said, rates are going to shoot high and they're going to be in the 6% range by the end of the year, probably higher. And little did we know that, by the end of 22, we were going to touch the 8% range. Right. And so, we hired a lot of these originators, and these C originators, arguably a lot of mortgage companies made a lot of money on them. That was their bread and butter of their workforce. Well, in 23, that became the bane of their workforce, because inevitably at the end of the day, if you had to pay a draw, this person wasn't covering their draw. It was a drag on them, and then they'd make it up every 60 to 90 days. And then there's the relationship aspect. Well, he did this, he could do it again, or she could do it again. So I'm going to hope that inevitably that they're going to turn the corner. And I think any of us as leaders, because it's people, we are not naturally built to be just ruthless and indiscriminate on, firing people. But, I learned really quick that we are what we allow and tolerate. And over the course of 18 months, I lost $6 million as a business operator, hoping and praying for people to get better. And so the sooner that you make decisions that you don't want to make decisions on, the easier your life gets. And so when I had to, reconstitute my world in 80-20 everything, which Todd tells you to do that and says, hey, look, if you look at 100 referral partners, drill down on 10 and go deeper with those 10, you're going to get more productivity doing that than having 100 referral partners. The same holds true with salespeople or ops or anyone else. It's getting that A or B player. And so I just immediately started deselecting, and I went from 500 people in an organization down to 60, and I became profitable. And it became a real simple answer. And arguably today, the indecisions that companies that don't want to make today, because there are organizations or people that go to the broker side that are hiring loan officers that do a loan once every quarter, it just doesn't make sense to me. Like what you're basically doing is enabling the problem that is now affecting our industry, which is we have too much capacity. We talk about capacity on the operation side. We have too much capacity on the sales side. And a C originator is going to purely focus on rate and use rate or feature as a way to sell instead of being relational, understanding what the consumer needs, what their short and long-term objectives are, and then structuring a solution predicated around that. They just want to sell rate. And so now that's gone into a rate war with, wholesale and or brokers and IMBs. And, you see a bunch of loan officers that have jumped to that model because, the broker model is, let's say, been more progressive than the IMB channel. But even if you have the best rate in the world, if you don't have a way to go out and get business, or you're not willing to want to go out and get it, it's not going to solve for the issues that you have anyways, right? And so we're seeing that. I've seen every loan officer that I've seen move to a broker model, it hasn't worked because it didn't fix their business, right? To me, it's really clear about what
it shows up. It puts a magnifying glass on your challenges in your business, because I don't know if this stat is correct or not. You probably know better than I do, but I saw a stat the other day that 24,000 loan officers in the last 24 months have gone to the broker channel and have left retail. I don't know if that's true or not, but it sounds like a big number. If there's 60, 70,000 loan officers still have licenses nationwide. So
no, I want to say the numbers kind of sits. I think the total amount of licensing, I think at peak was like 360,000 licenses is what we had at 21. And then by the end of 23, we were sitting at like 140 or 150,000.
Okay.
And I think by the end of this year, we're going to probably be at about 80 to 90,000.
Okay. So 24,000 or so went to the broker channel. I was one of them. So I was in retail until August of 2023, and then went and launched Aspire Mortgage Advisors, which is a broker. You realize, I've done this for 25 years now, but loan officers, some of the loan officers that I've recruited that joined my brokerage, they have zero business being a broker. And then we've parted ways with a couple, but in the retail space, it's so much easier to do loans than in the broker space. And
you don't have overlays per se. You can control the back end. You can talk to an underwriter. You can send out courtesy docs. The controlling the fulfillment to me is the biggest aspect. And that's where capacity precedes production. That's the one challenge that I see with the broker model is you don't control your fulfillment.
Well, 100%. I think when you look in the retail space, I'm not the only person who's ever experienced this. I'm sure you've probably seen it yourself. A file gets suspended. You've got to restructure the file. You're 5 days before closing in the retail space, and you're still able to get the underwriter to approve it. And then you've got to get docs out, the ICD out and docs out. And within a 3-day window, you can still do that in the retail space. If you have a ball drop like 5 days before closing in the broker space, there is zero chance you're making that closing.
100%.
They don't move as fast as possible. So quality upfront of quality of loans is like 10 times more important than any sales skills. So when you realize these retail loan officers that have gotten in the broker space, and two had joined my world that we've parted ways so far with, that if they don't care about the quality of how loans originated up front, there's no way to save that loan, because you just don't, you don't control underwriting, and then you just don't have, you just lose control on the broker side compared to the retail side where you can come in and save the day last minute.
100%. But I also think this is part of the problem with our industry, right? Like when I got into lending and I was on the broker side, I learned real quick, much to what you're talking about, that the nuance of how you package a loan and understand guidelines and understand what you can and can't do is the key to getting your loans closed. So after touching the stove a bunch early on in my career, I'm like, okay, well, I'm going to take it upon myself. Instead of being ignorant, I'm going to self-educate myself. So I read the Fannie Freddie seller guide, same with Jenny, same with, all of the places that I brokered to that were jumbo or non-QM or, at that particular time. And I learned the programs inside and out. And that's what made me effective. And arguably today, the best loan officers, when you talk to them, they actually read the Fannie Freddie seller servicer guide. They don't take the oral gospel that becomes mortgage, which is loan officers are too lazy to go in and educate for themselves. They'd rather send an email to an underwriter. And I can't tell you how often, because at Cardinal, my old partner, he never wrote a loan, or I shouldn't say he didn't write a loan. He hadn't written a loan in, let's say, since 2005. I still write loans. So when we had an underwriting issue, I would be the advocate that would go to head of underwriting and argue, whatever the underwriting disposition is. And I think my success rate with arguing with our chief credit officer was 95% of the time. And I found out a lot of the times underwriters, right, make mistakes just as much as originators do, right? So, to any originator on the call today, and I just, as a caveat, do yourself a favor, educate yourself on the products that you're selling and know them inside and out, because that's more than 80% of your problems, and that's, you do that, then it's lights out. But if you don't, and you take a shitty 1003, then you have problems. And that was the problem, let's say at Cardinal. Cardinal is very tech focused. They have underwriting guidelines built into the LOS. If you take a 1003 and it doesn't fit guidelines, you can't push it to disclosures, because it tells you, hey, you got a warning, you got to fix this. Well, in Encompass, you could do that. And how often or not do you meet originators that take a really bad 1003, they can push through pricing and program, just disclose the file to get it going, and then they give it to the processor and tell the processor to make something out of it. And so, but I'm just saying, this is prolific in our business, right? So I just realized, shit in, shit out. So to me, in my world, I pretty much 90% of our group uses centralized processing, and all of our processors are customer facing. So the loan officer's job is to take a complete 1003, lock the file, get the disclosure signed. Then after that happens, our people will pick up the phone, provide their cell phone number, take it all the way to COE without them having to be involved, unless it's a structure issue, pricing issue, the client becomes unresponsive. If the loan officer doesn't know how to structure a file, and that goes to me hiring that person, then I mandate to put an LOA in front of it, because again, shit in, shit out. So to me, it's like, you got to have someone in there that is filtering it, making sure it's tightened out, because your 1003 is your roadmap for your underwriter, right? And it's like, do you need to put everything in the file? Do you know what the minimum requirements are? There's so many ways to make it easier. And I mean, again, I don't mean to belabor the point of what I'm going here, but again, I think more than now than any time else, the people that are transacting today are people that arguably couldn't during the pandemic. You got a lot of self-employed individuals. You got a lot of millennials that are now coming into the process that are first-time home buyers. You got a lot of credit challenged people. If you don't understand the guidelines and you don't know how to read it, you're going to have a problem, because arguably these people that we're doing a majority of our business out of today, they were people that arguably maybe we would have passed on during the pandemic because we were so busy that we didn't have time for projects. But arguably every loan that we're doing today is some type of project. It's just that, our bandwidth for what we're dealing with has gotten wider, because it's the function and the nature of the business today. And so more than ever, you have to really understand what you're working with. Otherwise, it just becomes that much more amplified, in my opinion, from an origination side.
Yeah, absolutely. And I think, when you look at it, one thing I learned probably, I think it was like 5, 7 years ago, a mentor had taught me that, as a retail loan officer, as self-source loan officer doing 50 million, 100 million, 200 million, and the progression and being able to do that much production, you start listening to your own hype. And what you
Yep.
learn, what's really taught us, all of us, through this 2022, 2023 phase that we've been through, is at the end of the day, the best operators, not the best originators, or not the best salespeople, are the most profitable. When you learn how to focus,
100%.
yeah. But the mindset, the lenses that every other producer looks through. I tossed up $10 million a month in loans, or I tossed up $100 million in a year, or my company's making so much money off me. And most people don't understand the financial operations and the operations process is more
Yep.
important than origination.
No, 100%. And, I think that, and again, so to me, like there are four things that I inherently look for with anyone that I potentially hire that are non-negotiables for me, which is they have to have integrity. Number one, right? You got to trust the people you work with explicitly. You got to feel that they're going to act in the best interests of the company, the client, that they're going to do the right thing. So integrity to me is number one. Number two, they got to be passionate about wanting to provide a five-star experience and committed to that process, because to me, as a go forward in the landscape with AI and everything else, 5-star is mediocre. You have to, what are you doing to go above and beyond that? But 5-star is the minimum. Three, you have to understand profitability. You have to understand economies of scale. You need to understand the margin that you have in these loans. A lot of loan officers want the cheapest rate. They're not understanding that we've had margin compression, that 60% of the margin's been sucked out, that incrementally making 0.5% more in fee could be as much as 0.5% in rate because of circumstantially what's going on. So do they understand the capital, the capital part of it, secondary aspect of it? And if they don't, educate them on it so that they're in control of how they want to go to market. But it's not about like margin maximizing more for your own express self-interest. To me, money and margin is a tool. You can use it to pay your people more, or you can set a sharper price and then pass that through to your client. But you need to understand how input output, and really anyone today that has a processor in their office, if they're not doing 40 plus files, shouldn't be having a processor in their office. They should be setting up a collective and sharing in that expense. But everyone said, well, I need control. I need a person to do this. Well, if you have a replicatable process, you have a service level agreement in place, you've put minimum standards in place, you really don't need control, because you know that when you're putting it in, that it should come out quick. And so, the illusion of control is a funny thing to me, because really at the end of the day, we're not in control of anything. We think we're in control of it, but really we're not. But it's getting the right people, right? And then the fourth is professionalism, right? We see people, our coworkers, more than we see our family every day, and we got to like and admire the people we work with and be able to work alongside each other and respect one another and be aligned in the same point that we want to go, where we want to grow and how we want to do it, which is vision and values. But, there are a lot of people in this business that have a take no prisoners approach. That's not me. That's not something I subscribe to. And so less is more. And I think it's really being selective about the referral partners you want to work with, or the loan officers that you want to hire, the people you want to hire, because at the end of the day, we all have a choice of who we do business with, and we don't need to be everything to everyone. We need to just be specific about what we're doing.
Yeah. I think, as we get to our closing minutes here, and I want you to have the last word, and I want you to have the closing thoughts. If majority of the audience are loan officers that are listening to the podcast, and we polled them, it's loan officers, CPAs, financial advisors, family will attorneys, insurance agents, and realtors. So as you're looking at that audience, and majority of them are loan officers, clearly, but what is some words of wisdom? How do you really go into, closing out 2024 as we get to the second half of the year and launching in 2025 with this new climate we're in?
Here's what I would say. The two things that you can control every day is attitude and effort. No one can take that away from you. So first and foremost, the fact that you're healthy, you have a family, focus on what is positive instead of what isn't working for you. and effort are you showing up every day and participating? So the one thing I say to myself when I have to look in the mirror every day is, did I give it 150%? Can I look at my wife or my kids in the mirror and say that I left it all on the table each and every day? And if you can do that, then there you go. And the idea is that you just want to move yourself one step ahead each and every day, right? It's that consistent approach. If you think about going to the gym, if you go work out once, are you going to get ripped? Are you going to be in good, healthy shape? The answer is no. It's a regimen. It's about being persistent and consistent, setting a habit, putting structure, time blocking, putting that in place. And when you do that, then the result of that is you chisel yourself and you get into shape. And so just remember that your work profession is the same as your health. You have to start by setting good habits. You got to be consistent and persistent every day with doing it. Two, you got to be, if you're sitting behind a desk and you're waiting for the phone to ring, that's problem number one. You need to be getting out there and meeting with referral partners and agents. You need to be using tools to find out who's in your market that's doing business. If you don't have access to MMI, you should get access to that. And you need to start being purposeful with how you are engaging the people, in the sense of, am I engaging the right people that I do want to be talking to? What am I doing to attract them? And it really comes down really simple, that someone said to me a long time ago, if you give more than you take and you help people get to where they want to go, you're going to get to where you want to go. So if you're going to an agent and you're selling features and programs and low rates, that's not what an agent wants to hear. What an agent wants to hear is, how are you going to help them grow a business? How are you going to help drive business to them? How are you going to help make their business better than what it is today? And the constant is that you have aggressive rates, you can close on time, and all the other things. So if that's what your feature selling, then you need to change it up. You need to focus on what's their why and purpose for their referral partners or the client that they're doing with. What are their needs? Are you meeting and exceeding their expectations? Ask people up front, what are your expectations when you're going through this process? What do you want out of, what does your referral partner want out of you? What do they expect out of a lender? If it's a client, what are your expectations in this process? You're going to know real quick whether you can meet and exceed them. That's the answer. It's real simple. We need to ask the right questions and listen to what people are telling us, and then solve for what they have a pain point. And if you can do that and you follow through with what you say you're going to do, then it's real easy to build business. And if you can make a raging fan out of a referral partner, will they refer you to another referral partner? The answer is yes. Yep. If you make a raging fan out of a client, will they refer you to another client? The answer is yes. But how often do we actually call the client and thank them, or the referral partner and thank them? How often do we check in and just say, hey, how are you doing? How's life? What's going on? Is there anything that I can help you with unrelated to mortgage that would make your life easier? If we took the position of care and just trying to help people and stay engaged, it's amazing how life instantly changes. And it's that thought process of abundance versus scarcity. And I think that's really what it is. And all I'd leave it for you guys is, look, if you don't have enough inventory in your market, then start marketing outside your market. If you want to grow your business, add more referral partners, or add more loan officers, or add another vertical of business like construction, renovation, reverse mortgages, because those are going to be a thing with more baby boomers having a massive amount of equity. If you want to go online, create a direct to consumer strategy, or go deeper with your past clients. It isn't for a lack of not having options to go out there. It's you identifying what you feel comfortable with that you want to go do, and doing a couple of those things, and not being completely codependent on one referral partner or one source of generating business, understanding that there are a variety of different ways to do it. And you need to master a couple of them to be successful at what you do, and make it replicatable and scalable, and understand your metrics. What is your cost to produce? And all the other things that you're going into it. And if you don't, then you need to stop and make sure that you really understand what you're doing, because I think this market trades across for 7 more quarters. I don't think that we get a reprieve, and you need to figure out, if this is the new normal, how to be successful in it. And if you can, that's jet fuel, because if you can survive in this market doing this, then you can survive in any market. And, that's my takeaway.
That's awesome, man. That's absolutely crushed it. Absolutely super thankful for your time, Jonathan. And super excited see where you take your new company, and then I'm sure it's going to get the new heights. So let's definitely keep in touch, and we'll connect again soon.
Sounds great. I really appreciate the time that you spent with me today, Wally. I hope you have a wonderful day.
You too, brother. I'll talk to you soon. Thank you, man.
Bye-bye.
So thank you so much for listening today. It means a lot you took time out of your day. I don't take that lightly. Understand very clearly that you're very busy. With that being said, if you want to continue your journey and learn more about 24/7 Mindset, if you're on Facebook, which I'm going to guess you are, then go to 24/7 Mindset on Facebook and join the private community. I do coaching tips on there on a daily basis, but from scripts on there to systems on there, models, and the ability to be able to grow and scale a business while you have a quality of life. Hope to see you there.